RCL Foods was previously Rainbow Chicken until it merged with Foodcorp in 2013. We've got a position in RCL in the portfolio.
It's the market leader in the SA chicken industry. It has also recently acquired TSB. The company is controlled by the Remgro group. I think they own about 70%. It has a market cap of 15.8 billion rand, a PE ratio of 67.9 and a dividend yield of 0.9%. Now, you've got to take that PE ratio with a pinch of salt or pinch of sugar maybe, because obviously there's a lot of moving parts. Those acquisitions are all recent. What's it looking more like headline earnings wise?
Yeah, look, if you look at the last 6 months, it's about 69 or 70 cents. So on a 18 rand or a 17 rand share, where it's about the last few weeks, that boils down to about a 12.5 or a 13 PE, if they can repeat those numbers. But yeah, I think they certainly can.
Do you think it's the right strategy to have a small position in RCL at this time in the hot stocks portfolio, given the nature of the hot stocks portfolio, which is now all about long-term investing, Gabrand?
Yeah, I think so, and I think we put it on the previous time I was on the show. So you got about 30% of chicken business here, which got feed and chicken in there and a bit more downstream on the chicken side, which is a brilliant business. It's always been, but it's cyclical like all the other chicken guys are, but a bit less with the diversification there. Then you got about 30% on the Foodcorp business, which is Oma rusks and Nola mayonnaise and
lots of pet foods as well, which are I think really good margins.
Foods and there's some kind of bread, Sunbake or somebody's as well, where the other guys got the Saskas and they got the Sunbake business. And then on the other side, they got about 10% Vector Logistics, which is a nice logistics business. And then the recently acquired Transvaal Sugar, Beperk or whatever, they is about 30% of business as well. So I think a nice mixture of businesses in the food industry. It's certainly where you want to be on a growth path. It's been reshuffled, so it's a bit murky, and I think that's where the opportunity lies.
If opportunity lies, maybe we should buy a little more while Paul is away.
Well, obviously, I mean, the Remgro guys often get it right. There's lots of potential synergies in there, as Gabrand mentioned, between those businesses within RCL. But then also, you know, Remgro have got the stake in Unilever, so, you know, there's other synergies within the Remgro group. And you have to back these guys. You know, they've taken, they've grown their stake in the business, and they've put a whole lot of businesses together which they think can work well together. Sugar, obviously, a bit of a negative connotation globally at the moment in terms of price-wise and lack of demand. People drinking less Coca-Cola, which has 8 spoons of sugar per can. So there is, you know, obviously diversification has its benefits, but it also has its negativities in terms of having, you know, exposure to things that aren't so great.
Gabrand, let's call it hot or not.
Yeah, I think sugar is an addiction, so I'm going to go hot. And I think it's an opportunity to buy some sugar assets at the moment.
Hot or not?
I'm also hot on it. I think, you know, Gabrand's obviously done his numbers, and if that PE unwinds to around 12, it's a really cheap entry into, you know, as we can see with the other businesses, what is deemed to be quite expensive, especially for, you know, food manufacturers. I'm hot.